Welcome to Know Your Crypto Compliance, a new YouTube series from Chainalysis centered around cryptocurrency policy, compliance, and enforcement in the fintech industry. This November 2022 pilot episode features Clark Flynt-Barr, Senior Policy Advisor, and Caitlin Barnett, Director of Regulation and Compliance. We'll cover monthly highlights, current trends, and news, and host a fireside chat with Caitlin.
Here are some of the highlights from November's regulatory and enforcement news. Of course, the big news this month was FTX, and we will get to that in our next segment. And in the wake of that, we have seen a number of regulators call for additional consumer protections. The White House has called for prudential regulation of cryptocurrencies. The Securities and Exchange Commission, or the SEC, released their strategic plan for FY22 to FY26. And that includes examining strategies to address systemic and infrastructure risks to our capital markets, including crypto assets, and enhancing its expertise and devoting resources to product markets, also including crypto assets. In CBDC news, the Fed announced that they have not yet decided whether they're going to issue a digital dollar. But the New York Reserve Bank has successfully experimented with a CBDC to settle foreign exchange transactions for wholesale use. This sort of payment service could allow retail business and financial institutions to settle instantly and could resolve and perhaps even replace efforts to launch a CBDC. Governor Brainerd has also reiterated that the Fed could not undertake the launching of a CBDC without congressional approval, and that if they did go down that path, it would take at least 5 years to implement. OFAC, or the Department of Treasury's Office of Foreign Assets Control, was very active on the crypto front in November. On the 8th, they delisted and then redesignated Tornado Cash, which is a cryptocurrency mixer. And this time they overtly alleged that North Korea had used the cryptocurrency mixing service to support its weapons of mass destruction program. They also published a new FAQ to address the definitional questions around what exact entity was being added to the SDN list and what activity is barred. And this is reinforcing their position around the designation of Tornado Cash, which has faced some industry backlash. If you want to learn more about Tornado Cash, we have a really great explainer in our free academy, which we can link to, as well as a blog on some of the compliance challenges that the designation of a smart contract-based entity poses from a compliance perspective for cryptocurrency businesses. And finally, on the OFAC front, they announced a settlement with Kraken, which is a centralized cryptocurrency exchange. Kraken agreed to pay $362,000 in fines, and this penalty stems from a lack of sufficient IP blocking controls, in which users signed up for the platform from non-sanctioned jurisdictions, but ultimately were able to access the platform from sanctioned jurisdictions. And the fine here could have been in the hundreds of millions, but there were a number of mitigating factors, including that they did not have any previous violations, and they have undertaken significant remedial actions. So, for example, as a part of its settlement with OFAC, Kraken has agreed to invest an additional $100,000 in certain sanctions compliance controls, including the use of blockchain analysis tools like those that Chainalysis develops. Finally, I wanted to highlight some of our own data that we put out in response to the U.S. Department of Treasury's recent request for comment on illicit financing in crypto that was due November 3rd. Chainalysis submitted a comment, and I would really encourage everyone to check it out. It's about 40 pages long. We'll link to it in the notes section. And we included some new data around illicit financing in DeFi, since we know this is going to be a focus for Treasury and a number of other regulators around the world in the coming months. Our data shows that while 22.3% of funds from illicit wallets are sent to DeFi, only 0.1% of all DeFi activity comes from illicit wallets. The vast majority of illicit funds that we see moving in DeFi come from hacks or exploits. In hacks or exploits, the attackers often end up with tokens that aren't listed on centralized exchanges, so they need to use decentralized exchanges or DEXs to swap them for something more liquid. And what we see is that DEXs have historically been used to convert funds to ETH in order to send funds to Ethereum-based mixers like Tornado Cash. DEXs are also used to convert to assets that will be more likely to hold their value, or in the case of stolen stablecoins, assets are swapped to another asset that cannot be frozen by the stablecoin issuer. It's also important to note that while we have seen a lot of regulators express concerns about DeFi and start to think about how they can bring some of the elements of DeFi into the regulatory perimeter, from an investigative point of view, some aspects of DeFi actually make investigations involving its illicit use easier than those involving centralized cryptocurrency services. And this is because DeFi does not obfuscate transactions. All of the related transactions are public, they are all recorded on-chain, and they are therefore traceable. And so this means that investigators can leverage blockchain analysis solutions like Chainalysis Reactor or Storyline to gain an exact picture of the flow of funds. It's also important to remember that DEXs do not enable the conversion of funds from cryptocurrency to fiat currency. You can't exchange crypto to dollars or euros using a DEX. This still must be done through a centralized exchange of some sort. So I'd encourage everyone to go check out our response to Treasury and see all of the other data that we've included there. In recent news, it's hard to think of anything more impactful than the collapse of FTX. This event is significant, and many people will be directly and indirectly affected through these failures, the full details of which will only be fully known in the weeks and months to come. It's devastating to hear how many users and businesses have been adversely affected by this event. Every industry has abused failure and fraud, and clearly crypto is no exception. Where there may be advantages, at least from an investigative perspective in cryptocurrency, is the transparency of the technology. Blockchains are inherently transparent, and this allows for an in-depth analysis and understanding of the on-chain flow of funds. As policymakers examine this event and work to determine how such events could be prevented with US exchanges, this information will be very helpful in informing policy solutions. In recent years, countries around the world have collaborated with input from industry to craft anti-money laundering regulations for cryptocurrency businesses. And the US has really led these efforts and has had AML regulations in place for cryptocurrency businesses since at least 2013. And these have really become a global standard. Chainalysis has built great products, including transaction monitoring and investigative tools, that have helped the industry to comply with these standards. Today, more globally coherent standards are needed to address how markets should function and how businesses should conduct themselves and protect consumers. We expect more policy discussions focused on consumer protection, including a focus on custody, disclosure, market structure requirements such as separating certain activities like custody and trading from operating under one roof. Many governments, including here in the US, had already been focused on a lot of these issues. Prior to these events, we'd seen governments at the national and international level, including the FSB's crypto policy consultation, IOSCO's launch of work streams on DeFi and crypto regulation, the OECD's new crypto asset reporting framework for tax obligations, the EU's MiCA or markets in crypto assets legislation, as well as a number of bills in the US focused on spot market authorities, tax issues, and stable coins. We are likely to see a number of countries push for regulations that would help to prevent incidents like the FTX collapse in the coming months. And in the absence of legislation or regulatory guidelines, hopefully the crypto industry will work together towards standards of conduct, including reporting on reserves and other disclosures to ensure that the industry can meet obligations to and maintain trust of their clients. Thank you for tuning in. I'm joined today by Caitlin, who is our Director of Regulation and Compliance for a quick chat about how she got into crypto, why compliance in this space is different and perhaps even easier than it is in traditional finance, some of the projects that she's worked on, and her advice for people in crypto today. So, Caitlin, how did you get into crypto?
On accident, if I'm being completely honest. So I was working in the traditional financial sector, and I was at a German bank. I had just started in July of 2015, and by December of 2015, they were talking about moving the whole compliance operation to Germany, and I'm based in New York and wasn't going to go to Germany. So word got out on the street, very quickly, and we all had recruiters reaching out to us left and right. And one of the recruiters reached out, and the opportunity was for a company called Gemini Trust Company, and the pitch was, Cameron and Tyler Winklevoss, the Facebook guys, they started a Bitcoin exchange. It wasn't even crypto, it was just Bitcoin. And I remember telling the recruiter, I know nothing about crypto. And they were like, that's okay, it doesn't matter. They're looking for a jack of all trades compliance person, which is what I kind of was up until that point. They wanted someone who knew how to do onboarding, someone who had a legal background, who could review subpoenas and things of that nature, transaction monitoring, all that fun stuff. So I kind of ticked all the boxes. So I figured I'm not going to Germany, I may as well go on the interview. And I remember going on the interview and meeting with a lot of engineers and a lot of very technical people. And I was like, there's no way I'm getting this job. Absolutely not. Like, they're not hiring me. But fast forward, I got the offer and I figured, why not? I had talked to a couple of my friends who, one was a patent attorney, and I reached out and I was like, hey, what do you know about Bitcoin and crypto? And he was like, do it. All I'm seeing from a patent perspective is blockchain this, blockchain that, like 100% do it. So fast forward, that was July of 2016. And so here we are over 6 years later, and I'm still in crypto.
That's awesome. Sounds like a really interesting trajectory. What do you think is sort of most unique or interesting about compliance in the crypto space compared to TradFi, shall we say?
Yeah, it's a great question. And so again, when I got into crypto, I knew nothing. And I was being tasked with coming up with compliance policies and procedures. And so I really just mirrored what I knew from TradFi. Gemini, for example, is regulated as a trust company by the New York Department of Financial Services. So they are held to the same standards as traditional financial institutions. So I implemented all of what I had learned in the traditional financial sector over on the crypto side. But the one aspect that I think is the most amazing, and it's probably why I work at Chainalysis, is the blockchain analytics piece, and the transparency that gives you into cryptocurrency. And I can remember the first time I saw blockchain analytics, we saw funds coming from a dark market into a customer account. And I was like, wait a minute, like I don't have to do a request for more information. I don't have to, do Google searches on Caitlin Barnett LLC. Like, this is clear cut coming from a darknet market. I can close the account, file a SAR, and move on. And to me, it was a very light bulb moment. And I think people have two gut reactions to blockchain analytics. They either love it and have my experience where they're amazed that, they don't have to do these whole crazy investigations. They can just rely on the information, or it's terrifying because you actually can see where the funds are coming to and coming from and going to.
Yeah, absolutely. What do you think is the most interesting project that you've worked on that you can talk about?
It's a good question. There's been a lot of interesting things. I think probably one of the most challenging, but also one of the experience that I probably would never gotten had I not been working in crypto was in 2020 when the SEC filed their suit against Ripple to say it was, potentially a security. I was working at one of the major exchanges, and the really fun thing was that this was all during Christmas that they decided to do this. So all the exchanges were scrambling the week of Christmas. I was on the phone Christmas Eve and Christmas Day with outside counsel, figuring all this out. But the amazing thing to me is, when would I ever have the opportunity to delist a potential security from an exchange? I don't think I would have gotten that experience in TradFi. So while it was painful to go through, and, I still think we're waiting on the outcome there, it was an amazing experience. And I can remember our outside counsel at the time being like, I know this sucks. I know this is crazy. You're going to look back on this and be like, wow, I was involved with delisting a potential security and going through, all the different ramifications. And we were a global exchange too. So we were only delisting on the US side of the house, because obviously the securities laws don't apply globally. So it was crazy. And I can remember I think Jackson was like 3 years old at the time, and he didn't understand why mommy was on the phone on Christmas, like while Santa Claus was, in the house dealing with all that. But it was an amazing experience looking back.
That's really funny. Yeah, I feel like crypto offers a lot of very unique opportunities like that.
For sure.
So, as the crypto space continues to mature, how do you think the relationship between compliance and enforcement and policy is going to continue to evolve?
I think it's just going to get stronger. I think there are a lot of players in this industry who have been trying to do the right thing from day one. You can take a look at the various exchanges throughout the world, not just US based, who have looked for licensing before they started operating, looking for legal opinions before they offered services in specific jurisdictions based on products and so on and so forth. Regulators, I think, get a little bit of a bad rap. This technology is moving so quickly that it is nearly impossible for anyone to keep up. And I think what the best we can hope for is thoughtful regulation. We don't want to back people into a corner by coming up with regulation today, and then the technology is going to change and it's not going to be applicable tomorrow. That's not going to help anyone. I think there's a lot in the news right now and about this regulatory uncertainty and lack of clarity. There is, in some instances, I think securities laws, for example, around what is a security and what is not. But when it comes to the basic compliance requirements from a BSA AML perspective, it's very clear what's expected. And so I think there are good actors and there are bad actors. And, I think this relationship is just hopefully going to continue to be strengthened as time goes on.
Yeah, I couldn't agree more. And I think you're totally right. Regulators are in a really difficult position. I think you and I spend all day looking at crypto. This is our whole job, and they are in a really tight spot because this is one of 10 things on their plate, and so they're trying to understand the technology that is moving so fast and apply regulations to that. And I don't envy them that position. So I think it's really incumbent upon industry to figure out how they can help educate them and provide them with information and arm them so that they can craft sound regulations that work for crypto.
Yeah, absolutely. I think they get a bad rap. And the fact that people say there is no regulation, that's not true. There is 100% regulation out there. And so that's been very frustrating lately, I think, to hear people constantly come back to that. And I just want to, be a help to regulators as we continue to, foster those relationships. But you're right. You and I look at it nonstop all day, every day. Not everyone has that luxury.
Yeah, we do hear a lot that crypto is the Wild West. And I think, that's just crazy. It's not this is our business model, is we provide compliance software to all of these companies that want to be compliant and are doing anti-money laundering, transaction monitoring, and really making robust efforts at compliance in this space, and not necessarily getting the public credit for that they deserve. So hopefully we can build some awareness around that as well.
Yeah, I think we're doing a good job trying, but we could obviously be doing more since the narrative needs to be changed.
So what advice do you have for people who are currently in this space?
I feel you. I know you're in a tough spot right now. It's hard, right? Even without the craziness of the past couple of weeks, month, with everything that we're seeing, it's hard being in this industry. I look back on the fact that I've been in it for 6 years, and it's mind blowing. I guess I'm a little crazy that I thrive in the craziness, but it's definitely a wild ride. I think you just got to keep your head down, keep pushing forward, keep trying to do the right thing. The recent layoffs have obviously been really tough for a lot of people in this industry, and I have a ton of sympathy for those people going through that, because that just sucks. But I think this is a great space to be in. Again, coming from the traditional financial sector, I couldn't imagine going back because I do love this fast-paced nature of the industry. And I love being at the forefront of all the technology advancements that we're seeing. And I think there's so much good that's going to come out of crypto and blockchain analytics and all that fun stuff. So just keep your head down, keep trying, raise your hand if you need help with stuff. No question is dumb. I know, people get a bad rap for asking questions, but it's impossible to know everything in this industry. It moves way too fast.
Absolutely. Yeah. I think that's great advice. Thank you so much for joining us, Caitlin. It was such a pleasure talking to you about your experience in crypto and compliance. And please join us next month, everyone, when we turn the tables and Caitlin will interview me. And in the meantime, I hope everyone has an excellent holiday season.
Like and subscribe to the Chainalysis YouTube channel to see more content like this. And we'll see you next month with a new episode of Know Your Crypto Compliance.